Hey everybody, what's up? It's Booksy. This is Tuesday, September 26th. So this is a flash update on AMC. I did an update yesterday doing the weekly outlook. I briefly mentioned, I think for like 2 seconds, that there was a chart that I didn't really want to get into. I'm going to get into it a little bit more today. So someone had posted it, and I guess there was other people that were looking at the same bottom, which is great. I think it's a good comparison. And it's a comparison between the bottom that occurred back in... It was really January. I guess you would want to consider it to be January of 2023 because there was a downward move that happened from December all the way down through early January, and then there was a reaction from that move. And a lot of people are rightly comparing the move that we just had to that particular move. And I'm looking at a 2-hour time frame on either one of these charts. I did a different kind of an analysis on it on my other chart, and I know that it's so messy here that a lot of people would be kind of have a difficult time maybe following what I even did. And I did it on this chart in a 1-hour time frame, and on this particular one I actually looked at two different areas. I looked at the bottom in that January of 2023, which is this year, and then I looked way back at May of, I want to say 2022. Let me make sure. Yeah, May of 2022. And the reason I did these is because they're both found in the same place on the fractal sequence here. They both have S curves, and they both do the same thing when they get to the bottom, which is once the S curve is done, they both become pinned under the 50% RSI, and they don't break that 50% with any kind of strength until there's kind of a bigger move to the upside. And in one case, that move is an early push over the major creek here, and then we have the big reactionary move that happened in August, the distributive-like move. And both of them set up very similar ways leading up to those final moves. They're actually pretty much identical. In terms of how they cross the creek. You can see there's an M cross and an M cross. There's that last minute dive to get to the RSI being oversold, and then there's a big push to the upside. I took the bars pattern just to kind of demonstrate like how similar these are, and then like perhaps what would that final move be like, and it would be something similar to what we see here in the sell-offs. But I don't want to get hung up on fractal sequencing, because what I really care about, and this is why I didn't really want to go through this chart today, what I really care about is how these guys are navigating these bottoms. And there's a couple key things that you can see here. So number one is there's an M shape at the bottom, and you might think that the M shape at the bottom is actually the bottom of the move. It's actually not. In both cases, the M shape on these S curves coming down, they're pretty clean, interesting, like straightforward S curves. Like they're very tight. I mean, not interesting. They are interesting, but they're very tight S curves. And the main thing is the actual RSI, specifically if you look at the moving averages, actually is divergent before the bottoms are completely in. So there's a sense that, yeah, by the time we get to this bottom, we're actually on the second part of this M, and it's divergent. And the same thing applies here as well. By the time we get to the bottom, we're actually on the second part of this M, and it's divergent. So once that happens, it goes into a kind of a build-out phase where you're building out, typically with this kind of weird, I know it's sort of hard to see, but there's this weird like triple top anomaly that seems to appear every time, leading into that first M cross, which is right here, and then right here. And I'm kind of saying here, but you're going to have to just kind of look at it if this is something you want to see. Basically, what I'm observing is that as it pushes out, there tends to be this kind of like a 1, 2, 3, and then a bigger push across. This one is a little smaller, but it's there as well. There's a 1, 2, 3, and then it finally gains some momentum. And the comparison that was made in the Discord comes from another trader. I don't want to misquote who it was, and unfortunately I didn't look at it right before the video, so I don't want to make it sound like I'm taking their information. I did this video before I saw that they even had done the same comparison. But regardless, they're doing it in a completely different way. I don't particularly like the way they're doing it, and that's just me being stubborn and maybe a little bit arrogant. But it's because they're using numbers and they were like lining up like 1, 2, 3, 4, and they were looking at tops and bottoms. There's a place for that, right? Like I'm just doing that right now. I was showing you, like I'm counting it, and I'm saying, yeah, there's these kind of interesting anomalies. But what's more important to me is not the 1, 2, 3, 4, but the relationships, right? And how the divergences are set up, which is what we just talked about before that 1, 2, 3, 4 stuff. And then ultimately, like, where does it break out? And in both cases, it doesn't ultimately leave until it leaves its channel. And there's other things there that indicate like where that bottom might end up being. But in both of these situations, you have kind of a different type of bottom, right? Like in this one, you never make a lower low again after that first low. In this one, you do come down and make a spring bottom and then go. In both cases, you've got the double M shape. One's just really tight, one's really wide, right? One's long-winded. But also, again, like you don't really leave until you leave that downward channel that's been created. And I don't even have it drawn on this chart. I'm going to go ahead and draw it back up over here. But basically what we'd be looking at is this guy right here. And you might say like that's a little too wide or whatnot, but take it to the other side and you can see what I mean. That this is the downward channel bottom over here. And I know people are going to say, well, maybe it's a wedge or this or that. I don't really particularly think it is, but regardless, it doesn't ultimately like matter, right? What happens down in the RSI or what happens with the pricing 1, 2, 3, 4, 5 if you don't get the breakout and you can't time that. So does this chart do a good job of that? No, not really. I ended up kind of sitting on my laurels about it for a little while, and I had posted this one in our Discord, and I said I don't think anyone's going to actually sit here and try to analyze it. It's a bit convoluted and confusing. I know the markers are correct where they need to be, but the bigger pictures here where I was marking off these big giant creek crosses, right? And I'm looking at how this is basically like the center of a bridge-like motion, okay? And then we come to where we are now, and I'm looking at, again, RSI comparisons, I'm looking at the channel comparisons, and I just start taking a look at, well, where exactly is this sort of lining up to fall into this patterning? I think there's a lot of ways to go about it. I didn't want to go through it all in the video yesterday. I'm trying to make it very, very brief this morning. I'll do the best I can. I know we're already 7 minutes in. I talked about yesterday some late pennant targets, about 554. I still don't think that's completely unrealistic. A pennant would have a breakdown of about that target if it's a continuation. But you might be saying, hey man, I feel like it's about to reverse. It's got this nice LPS structure on it. It pushed up high yesterday into the range. It's above like 50%. All it has to do is break back above and it's going to go, right? Well, it could be because we're at the very edge of that channel line that I talked about just a second ago, and it looks like it's about to go. I went back yesterday and I took a look at why was I thinking that, downside was so imperative? Well, here's the thing, right? There is a pennant here, and a pennant breakdown would give you something like a 545 target. Interestingly, if you use a rotational target, which is taking a target from the very top of this move to the very bottom, you could see the rotational symmetry without me having to do a whole lot of work here. I hope you guys can see that. It's pretty clear as day, right? The last thing that's missing here would be that drop because this had a big pop to the upside. So the thing is I went back and I looked at the rotation and I thought, well, I know the rotation didn't look like it was finished because it never, in this case, it broke down and then it chopped up. In this case, it chopped up and then it should technically go down, right, as a reversal move. It never did that, not yet. So I went back and I observed and I looked at this and I just kind of mapped it out and I made sure that I got the 50% correct. These are equal parts right here. These are equal distances from the center point. The center point is right on that split date. And that center point also has a 50% value of 1961 in terms of like halfway between the top and bottom of this particular move right here. The rotations here are essentially identical in terms, again, of where they fall. And then if you look at forward, the very beginning all the way to the end, and you wrap it around that 50%, it's coming up fast. It's on Wednesday. This makes perfect sense because, again, if you look at the schematic here, it's lining up to basically either break or drop here. And in either case, you're essentially at the end of that rotation. Okay, so it's very, very, very soon. We're talking about today into tomorrow into Thursday. I mean, very quick. That's why I'm doing the update. So I went through and I looked at it in a little more detail, and I found that the rotation worked really well. These are actually the exact same numbers. This is like a 5-degree incline and a 5-degree incline. We're talking about from here to the end, not using these little extenders. And then I went and I looked at, well, what happened at the very end. I took the top portion here, and this is in regular trading hours, and I moved it right through the center mark. And you can see that, not surprisingly, when you go from the top and you go through the center, you get both the hit on this particular blue marker that I have, which was on the 14th, and then the hit right here on the 6th. Before you say, whoa, that's crazy, why didn't you see that before? I don't think there was a way to see it before. Okay, I don't think that you, without having like kind of the bulk of this particular thing right here, I don't think I identified it as a rotation. Okay, once I did, I've been kind of thinking about it a lot. So the question is, well, what's left? Well, you can see this actually has a double M right here. 1, 2. I'm going backwards on purpose. So from the blue line to the yellow line here. So I'm going from August 14th backwards towards July 23rd. You can see that M shape, right? Backwards and upside down. That's the nature of the rotation. Okay, backwards and upside down. And then when to do that is get a bars pattern, flip it and mirror it. And remember, this is like rotating this around the hands of a clock. And you can see why I think it's basically like a dead ringer for what we've experienced so far. And you guys are like, well, that's just a bunch of bouncing stuff. Like, who cares, you know? Well, I don't think it's that simple, but I do think that, yeah, there's a lot of bouncing stuff. The point here is that you have a pretty clear, you know, rotation. And the bouncing is really designed to get you what? Over the midpoint. So it's kind of like we're jumping over that middle creek, and that's what we're doing here. So we do have the double M shape, and then when you get to here, which is this yellow line, remember this is that rotation line I just talked about, where you've got these extreme points here, these anterior points. You're going to have this slide down towards the bottom and then push out over the top. This slides down towards the bottom, push out over the top. That's the same thing. It's kind of eerily similar. And then the last reaction here would be, in theory, that this essentially like comes and breaks down and goes beneath that bottom trend and then has a dip. Well, that to us will be right here. Like it would essentially break down, come back below 752, and then go low. When I did the measurement for it, I got a 699 spring, but that's in regular trading hours. So in regular trading hours, a 699 spring would be more than adequate. It would be the correct distancing. It doesn't look like it would be exactly right, but it is, because it has to do with where that 50% is. So how high is this? How far away is this from, which was way up here around 55 percentage-wise, to 1961 down to 699, okay? Those numbers add up. So it could be a very shallow spring. That's just enough to get you below the previous bottom. That would look really, really similar to what we see here with this last move going just down below bottom here, okay? Then there's another move, which is including the extended hours. And this one's the kicker because this one gives you that 535 spring. And the 535, you might say like, well, isn't that like way too low? Well, no, not necessarily. Notice that on every one of these bottoms, when we have that cross, once we've gotten this like triple top looking thing, and to me it looks like we're about on number 3 here, one of two things happens. We come down and we hit this trend, which is typically like back testing this jump we made. I don't know if that's happened yet. I think you could make an argument that it happened here. You could probably make an argument that it happened here. But then again, you could do that on this one as well, right? And it's like, that was still pretty early in the formation. That was before, as you were going into that big up thrust. Same deal with these two. They're pretty early. Those are the first two bigger pushes to the upside. So it's not like an exact science at this point. And so I need to make it clear that like what I'm talking about, yes, it's speculative, but I'm also saying that it kind of adds up that if this were to break down, that you would get to near 540 because that's a Bukowski target. It's also the rotational target, but it includes extended hours, right? And when I go to RSI, that's less of the concern. I don't really even care necessarily how far it goes. I'm looking at what's the point. And you can see the point here was that final push down to get the RSI low. See how the RSI came lower than the previous RSIs during this bounce? Not at the first bottom, but during the bounce. See how it came lower? And the price action did come down and it made a spring. But notice that on the big picture, even though relative, let's say December 30th to January 6th, the RSI came lower, notice that the price also came lower, but that on the bigger picture, it's still divergent from bottom to bottom, right? Heavily divergent. So now you have a lower price at the very end with a higher RSI. I think you would be in line with something similar right here as well if you came back and back tested. Again, not surprisingly, I think that this could happen very abruptly. I don't know if it's going to go super low, but I do think, yeah, it could come down and check this lower area and make a slightly lower RSI while still maintaining a pretty darn dominant bullish RSI trend. And if it makes a lower price point while making that move, I do think you've set up essentially identical. The other possibility here, the one that some people are going to be apt to point out, is that this is just an LPS. It's not going to end up coming back down. I'm not against that idea. And what I think what would happen is if this is an LPS, then we're a little further along in this whole shebang, right? We've already made the cross. We're now coming up to the end. We're about to just push out over the top. That's fine. And right here, when that does happen, it does come up to that first plateau, which is the preliminary preliminary support, right, when it bounced in. We're kind of right there right now. So we're right around that 50% mark. We could come down a little bit more, maybe towards 790, maybe even as low as like 760s. But, you know, this is the area that we kind of bounce in at. This is the area we're in right now. So sure, is that possible? Yeah, it's possible. And if it comes down, it may only dip like, again, maybe down to 790 or so and then push back to the upside and break out. In which case, what we should see on the RSI is we should see this come back. I'm on the 2 hour. It adds up to being like kind of the best time frame right now to observe this phenomena because on the other time frames, it's all slightly different. I think this one's really clear. I think on the 2 hour or roughly around there, 2 to 4 hour maybe, you should see this pull back and retest the moving average. Do I think it's enough? No. I still think there's plenty of gusto here to have one final big sell-off, whether that be that like shallow spring, maybe it only comes down just below 790s, or something really deep. I still think it's very possible, but it depends on whether or not you're including extended hours price action in that rotation. Okay? It really does. So here's the thing, right? The other problem with this, and it is a little bit of a problem, is that when you get to the end of the schematic here, the rotation doesn't really bode well for a big move. And I know that in my mind, I'm like, well, it could just be that this was a 50% retrace and then it hugged that 50% right here and expanded on it the rest of the way. That 50% in this particular case goes way back, but it ultimately hit that 50% of the S-curve. For us, that's like the $20 mark. It's 1961. So potentially this could push up and just be a 50% retrace up to like 1961, right? Easy enough? Yeah. But the other thing that's kind of something that's curious to me is that the rotation here really clearly back in this particular schematic comes back to this kind of baselining. And ultimately, the rotation has this really nice equal parts move up and then move up again after this reset here on this S-curve. And you can see that those measurements are essentially identical. So one of the things that kind of has me questioning is like, well, where is that? And I did the measurement. And again, if you use the extended hours move, even if it did drop, that extended hours move only gets you up to like 11 bucks, right? And then it's kind of like, well, then what, you know? Are we just going to kind of course sideways right here in this area, or are we never going to get to 50%? That doesn't really make me feel good. And then even if you use that move, right, that initial move here after that accumulation, right, that initial move here, and you use it from like a higher point, we're still talking about like $15 or so, but it's not, again, not way up here at 19. So there's a question of what's more reliable, what does it matter, should we worry too much? My answer is no, I don't think we should worry too much. Notice that this is like the 90, and it's roughly like a halfway point for this move. And the 90 right here is looking to set up about halfway between where we are right now and 19. So I'm more inclined to think it's going to hit 20 before ultimately going anywhere else. But price targets are tough. They're not exact. A lot of times we want them to be perfect, and they're not perfect. This one also has a suggestion that you could only get up to like 13 something, right? Just fill that first gap. So there's a lot of question marks here. Like, I'm not really positive. Maybe it's this kind of a push to the first one and then consolidation above the 90, just like it was here, and then push up one more time. My mouse is flipping out. Those are definitely possible. Okay. So either way, you can tell that this particular setup is primed to go. Okay. You're either kind of semi-bearish in which you think, yeah, I think we're going to come down for a spring first. We got to get this pullback, chill out the RSI a little bit more, and then we can push up, back test, this jump. Or you're in the, I think we need a deep spring. I think it's going to be a perfect rotation. It's way too perfect already. Why not just continue it, finish it? That way we're done with it. That's the end of the move. I think it's going to come low. That makes sense because of that pennant target. And then you can have a move, or you're in the LPS camp and you think, yeah, none of that matters. It's already primed and ready to go. It's just got to push out and go. And I know there's a lot of news coming out, the Taylor Swift stuff, the writer's strike. There's the old adage, sell the news, but I don't want to get ahead of myself and make it seem like everything's going to be negative all the time. It's not. I don't think this setup looks negative to me right now. I know I'm talking about possible big drops, but I'm talking about big moves afterwards, and I think that that's what we want. So I didn't go into like full detail about this one, and I'm not going to do that right now. It's a little bit too much, but nor did I do any kind of a close-up breakdown of these two things. I think it's debatable, and I think that the other people that were doing it were doing a good enough job. Like, I'm not going to go say, hey, they didn't do a good job, but I do think of the biggest picture here that I'm trying to get across is not that you count it out perfectly. There's definitely going to be parts of this that look like they count out perfectly, but really, like, what's the point, right? And really what's the point is when you get to this low, you're continuing the RSI divergence on this kind of bowl shape, right? You're continuing that RSI divergence, but you're ultimately setting up for that big breakout. And it involves two things. One, it involves a pretty hefty pullback on the RSI that's also on a bigger scale divergent. That happens in each case. The debate is whether or not that's already happened. Maybe it already happened up here. I don't know if I can say with any certainty. I feel like it hasn't, but maybe it already has happened. And then the other thing is that once it comes back above, notice that this actually chops for quite a bit, right around $35, and this actually chops for a bit right around the same time, around the 50. And it had hit the moving average first. So it pushed up and it confirmed and it started making higher highs and started pushing up. And that happened while the price was relatively still. So if you're worried, like, what if I'm going to miss the boat? Unless we see a big gap to the upside that you just can't see coming, I really think that Tuesday, today, you're probably going to see some pretty clear signs of what to expect on that. If it does drop down lower, you might be thinking, well, what do we do if it drops down lower? Well, look, this is a little mini S-curve right here. Okay, it's pretty straightforward, and I'm not using extended hours right this second, but you would expect something similar right here, which is why I got, again, that 699 target. For me, once it hits this outer yellow mark and then it starts pushing back above, it should be an M cross, right? Pretty succinctly down here. You should see it come across this outer creek. That's the easiest way to confirm entry, is just wait for the channel to break, okay? I know some people think that it's already broken. Some people are drawing wedges. I'm not doing that. I think that this is a pretty clear rotation. I think it's been methodically at the exact same angle working its way across this. And once it gets to the edge and pushes above, you'll see that bigger move. And that does happen here. I don't have it drawn out. It looks like this is it, but that's not it. It's actually like higher up here, and it breaks out like right here, okay, at that 35. So we're just kind of waiting on it, and I don't want to sound like I'm all super bearish or something all the time. I'm not. In the video yesterday, I talked about the same things. I just talked about it on a smaller scale. And by the way, I've been crushing it on these trades lately, and the main thing, the takeaway here is that if you're trading AMC, you could totally trade this thing like any other stock, but you have to just make sure that you're aware of what your time frame is. So I had like 4 trades in a row that have been over 30% during this time period, and yesterday I called out going to 850, and we went to 850. And it's not that complicated. If you know like generally where you're going to end up, all you have to do is then set up for that breakout and jump in at the right time. And timing is hard, right? It's difficult, but it's totally doable. It's totally doable. So when I look at this kind of stuff, this is kind of what I'm seeing right here. Spring cross down here near 7. We either have a SOS up here, high up in the 9s roughly, or that's going to be a gap up with a sell-off. We're not gapping up, so that's not going to happen. We're have a really mild gap up or gap down this morning thus far, but that hasn't happened yet. So I'm not really too concerned about this idea of a gap up. I do think it's possible you could have another run up here and still sell off, and that could be very distributive, so keep that in mind. You really want to wait for it to push up and find support. And once it finds support, then you're probably decent entry point as long as volume is following through, like good volume, okay? But we just haven't exited this channel line, in my opinion. So I don't think we're out of the woods yet. And then looking at those lower targets, you can kind of see pretty clearly how a slide down here would work, leading you down to like 699, where we'd slide down through this creek and then drop. All that being said, I hope you guys have a great day. I'm not 100% sure either way, but I do think that we do have a very strong move incoming. The question is just whether or not we drop first or just go. Okay? All right. I hope you all have a good one. I do not plan on doing another update unless I have to, but this is kind of an important one, so I wanted to get it out there before it's too late. All right. Bye, y'all.